Greeting to all the members who have joined in for this National Conference on International Taxation. We are here on the second day with reference to the role of chartered accountants in USA and UK. What is the financial services in these countries? What are the insights into this tax laws of these countries? And also, what a chartered accountant can perform as services in these countries. This will be the topics which our two speakers will be talking today. We have CA Ramakrishna Karanam, and we'll also have shortly CA Vivek Raj. Both the speakers would be sharing their rich experience about these two countries of USA and UK. So welcome to the chief guest and the speaker, CA Ramakrishna Karanam, and also my colleague in the Regional Council, CA Rekha Umasiv, and all the members who have logged in for this webinar on the role of the chartered accountants in these countries with reference to the taxation aspects. Friends, there are a lot of opportunities in addition to what we as chartered accountants can perform in India. Most important thing is, yesterday we had a talk on the role of CAs in Australia, Malaysia, today about UK and USA, and tomorrow it's on Singapore and Dubai. So there are a lot of chartered accountants who are migrated to these countries, and they're performing really well. As we have a lot of CAs coming into the profession, there are a lot of back-end works which are coming up into India, and I'm sure these experiences from these speakers would help us to understand whether we stay in India and do outsource work in India, or some of us who wish to go abroad and be hands-on in those countries and migrate to that countries. I'm sure the sessions would enrich and encourage us to take a stand and make path for our careers as it comes. I'm sure members are very eager to listen to our speakers here, Ramakrishna Karanam. Before I request him to address, I request CA Rekha to introduce the speaker and conduct this session for the day.
Thank you, sir. Thank you, Naresh, sir. Good evening, all the members. I take immense privilege in inviting you all for this session on virtual session on international taxation. I take immense privilege in introducing the speaker for the day, CA Ramakrishna Karanam, sir. He will be addressing the session about USA, the opportunities, and what are the role of CAs and services rendered in USA. Sir is a CFO of the Global Jade Global Inc., an IT services and consulting company which is based out of US, having approximately 2,000 employees. He is a chartered accountant with over 20 years of experience and also a CPA as well as an AI CPA. He has worked on various roles across finance, in accounting, taxation, compliance, mergers and acquisitions, and also valuations and corporate finance. He has also held various management positions in finance in Indian, American, and Japanese companies. I take immense pleasure once again in inviting you to the session, sir. Session is all yours.
Thank you, Rekha, and thank you, Naresh, for the opportunity for me to speak here on this forum. And good evening, everyone who have joined this webinar. So, while Rekha has said many things about my background, I would also like to very briefly walk you over. Maybe talking about my background itself can kind of provide a good overview about the opportunities that Indian chartered accountants have in the US markets. So I have done my articles from CA articleship from a firm called SB Bilimoria. And after I became a chartered accountant, I joined a company called Intelligroup. Intelligroup was a NASDAQ listed company. I joined them in 1999 as controller of Intelligroup's Indian subsidiary. After working for about 4 years with Intelligroup in their Indian subsidiary, I had the opportunity to move to the US. And gradually, I took up the responsibility of a global financial controller. And mind you, when I took up this responsibility, I did not have any other additional professional qualification. I was only a chartered accountant and nothing more. but the rich education that Indian chartered accountantship offers, that is enough actually for us to do any kind of responsibility in the US environment. AICPA regulations are lot closer, lot close. Of course, there are some differences that as chartered accountants, many of you may be aware, the US GAAP versus Indian GAAP, etc. But still, the experience that we have learned, the basics that we learn as part of our CA curriculum, that works almost 90% to handle the work related to US corporations. So, in fact, again, taking my own example, I can very clearly say that. So I started working as global finance controller of IntelliGroup from the year 2003. At that point in time, IntelliGroup was a publicly listed company. It was a NASDAQ traded company, and uh, the professional and the educational background that I had from Indian chartered accountancy, that was more than adequate for me to handle that job. And the job was not easy, right? Because being a public company, that too in the US, adhering to all the Security Exchange Commission, SEC regulations, and doing that job. Again, the point that I'm trying to stress here is no additional qualification was needed for me to discharge my responsibilities well as the finance controller, as chief accounting officer of a NASDAQ listed company. That's the power of the chartered chartered accountancy curriculum that all of us are studying, have studied, etc. That's the big wealth of education that we have. That is enough, especially from the US situation. And again, let us look at it, right? Even though Naresh sir has mentioned many other markets, US is the largest economy in the world. Our India, if we look at India, there are so many companies, US companies that are operating out here, and the need is to adhere to the US GAAP for all of these companies. And most of us, right, are working with these US corporations, they're doing their accounting job largely from India. So what is helping us in all of this? It is primarily our CA curriculum. If you are a chartered accountant, then as I said earlier, almost 90% of the US GAAP, you are very familiar with that. So that gives you the wealth of knowledge that is adequate, more than adequate to run your accounting function for any US company. So again, let's talk about my current job. I work as CFO of a company called Jade Global. We are a San Jose headquartered, privately held corporation. And how are we structured? Let me go a little bit more about how our accounting work is done. 90% of my accounting staff is based out of India, Pune and Hyderabad. I have 6 chartered accountants in the team. Again, these 6 chartered accountants take care of my entire accounting function. Then my books are audited by, being a private company, we can be audited by a chartered accountancy firm in India. So my books are audited by Grant Thornton Bharat. So this Indian company, Indian chartered accountancy firm, is auditing and issuing a formal audit opinion on the quality of my financial statements. My tax returns, Jade Global's tax returns, are handled by GT India. Again, these are a bunch of chartered accountants, none of them either in GT Bharat's team that handles my financial statements, or GT India that handles my tax returns. None of them are CPAs. I'm not for a moment trying to say that CPA is not required. CPA certainly provides additional qualification, but CA, as I said earlier, gives you almost more than 90% capability to handle, to discharge responsibilities of a US corporation. This is one of the key reasons why we have so many accounting jobs for US corporations that are performed out of India. This is, as I said, our biggest strength. And if you guys are undergoing chartered accountancy, or if you have already finished chartered accountancy, I must say there are tremendous opportunities, either from within India, because there are a bunch of companies that are doing their US accounting in India or even on the assurance side. There are the big four firms that are handling a lot of their audit responsibilities from their India offices. So these two are tremendous job opportunities, career opportunities for all of us chartered accountants. I'll take a pause here. I would ask Vivek to pitch in a little bit more because my friend Vivek also works for a company that has large presence in the US. So I would like to hear from Vivek as well about his experiences.
Thank you, sir.
Sir, before CA Vivek Raj addresses, I think I'll request Rekha Madam to introduce Vivek also.
Rekha, are you going ahead?
Yes, ma'am.
You're on mute, Rekha.
Yeah. Ma'am, now we can please.
Yes, yes. Thank you, sir. Thank you. Good evening, sir. Welcome, CA Vivek Raju, sir. I take it's pleasure in inviting you to the session. So Vivek Raju, sir, is the chartered accountant as well as a cost accountant with over 18 years of experience across the IT, telecom, and pharma industries. He is currently the CFO of the Value Labs, that is an IT and services consulting company which has close to 7,000 employees. He has worked in the past with companies like Aditya Birla Group, NTT Data, Novartis, etc., and across areas of finance that is spanning from financial reporting, GAAP compliance, taxation, treasury management, reporting, secretarial compliance, and governance. So over his tenure, actually, an interesting fact is the industry has worked in almost all the three financial reporting frameworks, that is IFRS, US GAAP, and Ind AS. So he has also has a deep understanding and exposure pertaining to direct taxes, international taxation, transfer pricing, treaty interpretation, FEMA compliance, and business valuation. He has also contributed to the Chartered Accountant Journal of the Institute and other journals in the field of topics relating to finance, accounting, and taxation. He also has spoken at various seminars at the Institute and other CFO forums. It's an immense pleasure from our side to welcome you to the session, sir.
Thank you, madam. Am I audible?
Yes, sir.
Yeah, we can hear.
So, yeah, good evening, everyone. So, to continue with what Mr. Ramakrishna Karanam has mentioned about, his experience of the chartered accountants and how chartered accountancy qualification is relevant in the US. I would actually extend it not just to the US, but across the globe. Whatever I have seen is that, the last 10 years, or whatever we have seen in India was a paradigm shift in the way our Companies Act has got changed. We have moved over from the legacy gap, the IGAP to Ind AS, and then we have also got a lot of changes, particularly on the income tax front, with all these BEPS things coming up, and Indian income tax also molding itself to be in line with most of what the developed countries and the OECD countries have. So what I have seen, at least the shift in the last 10 years of my career, is the Indian chartered accountants, whatever we are seeing right now, apart from what Mr. Rama has mentioned, in the US, we see them across the globe. Like, I have interacted with the Indian chartered accountants, basically who are working in Canada, a lot of the English speaking world, I would say, Canada, UK, Australia. And, you would not believe that, when we work with some of the people in Grant Thornton in Australia, I've never seen a local Australian person on the other side. It was always a person with an Indian name coordinating with us from the other side, and the person is a chartered accountant who has actually completed their course in the last 5 years, 6 years. So we are now seeing chartered accountants in almost every country in the world, who can basically their qualification is the local chartered accountancy that they have done in India. They are not, I've spoken to a lot of them, they have not done any additional qualifications, but whatever base they have in what our curriculum has provided, they are just able to build on it, and they are able to actually go and modify themselves with some small learning here and there, but they are able to sustain themselves. And that is, I think, a unique feature of the Indian chartered accountancy course that we have, is we are actually molded to do this, perform our activities across the globe, particularly maybe it on the accounting side or on the taxation side or anything pertaining to the field of finance. We are equipped, and once you actually cross the borders of India and you are in the local countries, you may need about a month or two to get acquainted with the local laws. But it's not that you cannot work there. It is that in a month or two you will be fully equipped to handle all the local things. So that is my observation to add upon what Mr. Rama has mentioned. So beyond US, we are also seeing people going to other countries, and if you see, basically even in countries of the Persian Gulf, like UAE, Kuwait, and all the GCC countries, plus Singapore and even Malaysia, we are seeing a lot of Indian chartered accountants working. I've even seen some of them working in South Africa. So it is basically global that the qualification is taking people. Rama, anything you may want to add?
Well said, Vivek. Yeah, certainly beyond USA markets as well, there are tremendous opportunities across the globe. But based upon my background, I kind of get stuck with a USA more often than not. Let's talk about the size of the US markets, right? The last study in the year 2020, there are 32 million uh, businesses in USA. And out of those 32 million, about 87% of them are private corporations. Private corporations will not be inhibited by any law or regulation, both in terms of where they get their accounting work done, neither where they get their books audited. As I have mentioned earlier, my company's books, J Global's books, are audited by Grant Thornton from India, right? It's the Indian chartered accountants who are doing the job. So many companies obviously are taking that route in terms of getting their accounting work done from India. So that itself has opened up enormous window of opportunities for Indian chartered accountants. But not just that, right? Even for people who are interested in taking up positions within USA, the opportunities have been tremendous. I have personally seen many chartered accountants from India who have moved to the US. Typically, if you work for a sister concern or a subsidiary of a US company for more than 1 year, then from an immigration standpoint, that person becomes eligible for an intercompany visa, which is much easier than an H1 visa. So typically for bright chartered accountants, I have seen these companies getting their work visa, which is called an L1 process, and enable on-site opportunities. That's one of the reasons why we today see so many thousands of Indian chartered accountants in very key positions in the US markets. And in addition to that, as Vivek has mentioned, the onshore opportunities are not limited only to the US. GCC markets are filled with Indian chartered accountants. You see a lot, many of them. In fact, when I did my CA, which was in the year 1999, that was kind of a tradition within my firm, SB Bilimoria, where most of my seniors, after they finished their chartered accountancy, they moved to the GCC markets, maybe Kuwait or UAE or Saudi or any of these countries, and they are now in very senior positions as controllers, as CFOs in those corporations. So US, USA, Canada, GCC countries, UK is a very large market again, and of course Australia, New Zealand. So the biggest advantage that we as Indian chartered accountants have is our English education, English education, and our ability to transact business in English has thrown up so many opportunities, both in India in terms of this job creation and also going abroad on site and taking up these key senior accounting and finance positions for Indian chartered accountants. if the focus of this webinar is specific to taxation, taxation certainly is different in India versus what we learn in India versus what may be required in the onshore countries, specifically US. But again, even here, I would go with that 90-10 rule that I have mentioned. Maybe when it comes to taxation, probably it is more like 75-25. Our knowledge as an Indian chartered accountant works to the extent of about probably 75%. The remaining 25, we have to pick up the local flavor. But unless you want to sign as a practicing CPA, you do not really need that qualification. I have seen many Indian chartered accountants becoming certified tax accountants through a couple of certifications and handling the tax related jobs as well for the US markets. Vivek, back to you.
Okay, so Rama, I have a presentation. So if you are done, I will start with the UK part of the tax presentation that is actually there. So maybe I believe I was told that the first speaker has some time constraints, and if you are done, then I will get started.
Certainly, Vivek. Sure, please go ahead.
Okay, so everyone, so what we will do is, as Mr. Rama has taken us through, what a chartered accountant can do in the US. Okay, so we will actually briefly go through, the next part of this webinar where we actually go through, the tax insights, particularly, I have a very small presentation on, what is there in UK. And I'll also take you through, what the chartered accountants opportunities are, and we'll also take Q&A after that. So, anything, Ms. Rekha, you want to mention before we start? Okay, so I'll just get started. I'll share my screen and let me know. So can everyone see my screen?
No, sir, not yet.
Not as yet. Not yet.
So right below the orange arrow mark, the third button, sir.
Just
Start.
Yeah, 1 minute. Huh?
Yeah, now
So
visible, sir.
is it
Visible.
now
Visible.
right? Okay, so just give me a moment. So what we'll do is we will actually take a step back before we get into the taxation. What we will do is we will see what UK is as a nation. What is its economy about? What are the areas of strength that UK has? Okay, and how different it is on the taxation perspective and how it is evolving. Okay, so just before we get into the country-specific taxation, we have to see that for the last 10 years that we have seen, there has been a paradigm shift in the way tax laws have changed across the world. Okay, particularly from 2012, first time when the OECD actually started working on the base erosion and profit shifting, right? A lot of actually, as you know, UK is an OECD country, and OECD countries have come together and they said, they wanted to actually reform their domestic tax laws and also ensure that they get the taxing rights on the revenues which are actually getting offshore. Okay, so there wasn't this increasing practice in base erosion and profit shifting that a lot of companies, we can mostly talk about US companies, but there are a lot of companies in other countries also which have been setting up entities in low tax jurisdictions or no tax jurisdictions, and trying to arrange their businesses in such that the profit accrues in one entity and the profit over there does not actually get taxed. I believe everyone has read about a lot about say Apple, the way they actually used Ireland, Google also used Ireland. I'm not specifically pointing at companies, but this is something which we all see in the press, and that is in public domain. So Apple, Google, and a lot of US companies which are particularly engaged in the digital services space, they have started using these routes. Some used Ireland, some used Bermuda, some used Netherlands or Liechtenstein, and all. So they kind of wanted to ensure that the effective tax rate of some of these countries has been as low as some of these companies has been as low as 3%, 5%. And there have we ourselves have seen in the press that Ireland has been sponsoring this tax minimization, and it was actively helping companies to cut down on their tax bills at the cost of other countries, etc. So with all this thing in perspective, UK also started revising its tax laws. They have also introduced a lot of anti-avoidance measures, if we can call them. Okay, and then they actually introduced newer types of taxes to ensure that wherever taxes are actually shifted out of UK, they are actually being taxed. So with that perspective, let us actually move ahead. If there are any questions, maybe you can type in the chat box. Otherwise, we can just go ahead. Ma'am, can you actually see if there are any questions? Otherwise, we can just move forward, please.
1 minute, sir. I'll just check it up and share. We have 3 to 4 questions. I'll just share my screen.
Please.
Is my screen visible, sir? Excel sheet is visible.
I will take the first question. Is the CPA must? The answer is a clear no. Especially if you intend to work for any of the US corporations, CPA is not required. CPA is a must only in situations where you need to sign the financial statements as an accountant for a publicly for a public corporation. Otherwise, in order to work as an accountant or as a controller or as a CFO of a public or a private corporation, CPA is not required. And again, I'll tell you my honest opinion. If you are an Indian chartered accountant, the effort required to do CPA is probably 50% of what you have spent on doing your CA. Trust me on that. So if you have to do CPA, take it up. It's fine, but CPA is not a must for you to make a career in the US. I'm interested in capital markets. How is the scope in US? Again, as I said, US is the largest market. It has the largest market cap of all the publicly held companies in the world, and it is the largest economy. So from that standpoint, there is tremendous scope for capital markets, but it's a different skill altogether. If you are used to be a typical accountant, probably that skill is not adequate. You got to do a lot more to learn about capital markets before making a career. And as far as the scope is concerned, as I said, it is the largest economy in the world. So that scope is certainly tremendous. Vivek, do you want to take the third question? USA versus
What is
UK.
the third question? Where do I see the questions?
The screen is shared.
Oh, 1 minute.
You can click on the application so you can see my screen that is getting shared, or else you can stop your PPT slideshow so you can able to see.
Okay. On the third question, if you were to ask me which one is better for Indian chartered accountants, USA or UK, I would actually say it's a personal choice. I have seen a lot of people aspiring for US rather than UK, particularly because one is that, the kind of diaspora that Indians have in the US, and also the kind of opportunities that the US provides. But of late, I have also seen people, moving out of India to UK also, not just to US, but particularly because we'll also cover that in our presentation later. One is it's a common law country. So because Indian laws are also based on, the English common law, okay, a lot of our laws actually, be it the company Companies Act, or be it the tax laws, they are almost more or less similar. I would not say they are the same, because they cannot be the same, given that we are two different countries and we have different cultures and economies. But a lot of the tax laws in US and UK, and the the economic laws that we have, maybe you can even say the commercial laws, they are actually close to what India is. So you would not need a lot of effort to again reinvent yourself if you get into these areas. And also, even on the financial services side, London is actually a great place for financial services industries. Okay, you have all the large multinational banks, insurance companies. London Stock Exchange is where a lot of the companies list, or even try to list. As it's a prestigious listing to list on London Stock Exchange. So I have actually coordinated with a lot of insurance companies in London, and we have found some kind of Indians in this space. Either be it underwriters, or investment banks, reinsurers. But if you were to ask me, is US good or UK good? Again, it's a personal choice. But UK is equally good, and I have actually seen people moving out to UK also, being an English speaking country. Okay. So what is the next question? Recently qualified as CA, I got an offer from EY GDS for US tax. Is it good to go? Specifically, I got offer from US corporate taxation. Rama, would you want to take this question, or you want me to take this question?
I can answer that. EY GDS can and will certainly provide you a lot of good experience. So I would say, if your interest is taxation, especially from US standpoint, then EY will be a very good employer. You will be able to learn a lot. Whether you should take it up or not, honestly, that should be your personal choice. But based upon my knowledge and experience, I can tell you that EY GDS can and will offer you a lot of good work to do. It will be a very nice learning curve.
Yeah. And also, to add on to what the other speaker has mentioned, I personally know about a person who was working with Deloitte's India offices, and again on the US corporate tax, and he actually worked here for, I believe, 2 to 3 years, and then moved over to the US as an interfirm movement, and then worked there for a couple of years. Then the person moved over to RSM, and now he's actually a partner in in US RSM. So this is also a path for people to actually take. So I would suggest, yes, you take this offer, and you will not actually regret your decision. Okay. The next question, I'll take this question. How do I set up my own work on international taxation in India? So before that, I would actually say, if it's a new practice, you are a fresh chartered accountant, and you want to do work on international taxation. Okay, there are certain, I would not want to discourage you, but rather the most of the market towards international taxation is aligned to Big Fours. Okay, we don't see many other chartered accountant firms entering this space. But yes, we also have some tier one Indian companies, and some of the tier two Indian CA firms also now starting to practice on the international taxation side. Not exactly on the international taxation perspective, but at least on the transfer pricing part, I have seen people, working on the normal firms instead of being the Big Fours. But truly speaking, the core international taxation, like whether structuring of deals, treaty interpretation, and all, still that market has not come down from the Big Four firms to even, I would say, the tier one Indian firms. Some of them are still doing who are very niche and advisory. But if you are setting up your own work on international taxation, I would suggest you start with the transfer pricing related assignments, and then you can actually move over into the core international taxation part. It's a very good area. It's very evolving area, but it may take some time to actually make your mark there. Um,
I will take the next question, Vivek. Yeah. Is there any age limit to work in USA? The answer is yes, but the answer can also be long and short. I'll first give the short answer. The formal retirement age in the US is 65 at this point in time. And that has gradually been increasing year after year for a couple of reasons. One, the mortality rate is pretty high in US. So given that, based upon that, the retirement age has gradually been increasing. When I first moved to US about 18 years ago, the retirement age was, I think, 61. Over the last 20 years, it has moved to 65 now. And the expectation, the general expectation is that it will continue to go higher. One of the reasons being there is a formal social security program. It is like a provident fund in India where everyone contributes, and after the retirement age, government starts giving them pension from the social security program. And that program has been really running very tight. The funds in the program have not been enough to fund the pensions. So that is also a financial reason for which the government has kept on increasing the retirement age, so that the need for the government to start paying pensions comes much later than sooner. That's just a long answer, but the short answer is yes, and 65 is the age limit to work. That's the formal retirement age. Usually corporations do not hire people as full-time employees if the age is more than 65. Okay, briefly mention on laws that govern, like Companies Act in India, of financial statements, and of course the tax, okay, and of course income tax, state-wise and federal. Okay, so I'll speak a little bit about it, and then see if Vivek wants to take over. But my few things from my side. US GAAP is these are the accounting standards that govern the financial statements, and the US GAAP regulations are rolled out by AICPA, American Institute of Public Accountants, Certified Public Accountants, in conjunction with PCAOB. PCAOB is again Public Company Accounting Standards Board. PCAOB is in a way similar to SEBI in India. So these two play a key role. These two bodies play a key role in ruling out the US GAAP and making changes to it on a time-to-time basis. So this kind of governs the accounting requirements. And when it comes to the income tax laws, it is relatively different in the US. In the US compared to India. In India, what do? We pay only one income tax, right? And that goes to the federal or the center. Whereas in the US, there is one federal tax, and then individually each states have their own taxes. So practically a corporation would file a federal tax return and then also individual state tax returns wherever they are doing business. That's how it works. And there are also some states that have zero tax rate. States like Delaware, Texas, Florida, Montana, these are some of the states that have zero tax rates. But otherwise, these states have the authority to create and govern their own tax regulations. So federal tax, which is run by the IRS, Inland Revenue Service, that operates completely different from the individual states. Each state has a revenue function or a department that runs the state's tax function. Vivek, you have anything more on this one?
Okay. On the laws that govern the companies, like the Companies Act in India, I would say that yes, each state, it is more like 50 different countries in one single country. So each state has their own companies acts in the US, and some of them are very stringent when you see states like California, some like Nevada or Wyoming or Delaware have a fairly simple, state, corporate acts where how they govern you, and how they require you. But one thing is, but they're normally, even if you are registered in one state, there's nothing that actually prohibits you to actually go and do your business in other states. Only thing that is that you appoint agents in every state, to receive the notices, and you get yourself registered with the local secretary of state in each of those states. So, there is no one Companies Act like what we have in India, like Companies Act 2013. There are different Companies Acts wherever you are actually domiciled, wherever you are registered. You become the company of that particular state. That state actually requests you to actually file your financial statements and everything. But beyond that, it all depends upon which state you actually go and register. But I have seen a lot of companies register in Delaware, or even Nevada for that matter, because they want that flexibility on compliance. They don't want really stringent compliances, and they want to actually, so that time is not spent on compliance, time is spent on business. I think income tax question was answered.
The next question is, I I retired from an MNC major in 2018, and what is the scope, if any, at USA for taking up some assignment? Sir, you seem to have a rich experience if you have worked with an Indian cement major, because there are even today there are a lot of manufacturing entities in USA. So if you have worked with an Indian or rather MNC cement major, that experience will be of tremendous use, as per my opinion, in USA. But for you to take up some assignment, the key requirement would be your immigration status, right? Unlike, say, in India, we can go to any state and work. But if someone wants to work in USA, the most important factor is a visa, work visa. And that can be offered only by any employer only. So you would have to find an employer who is willing and ready to process a work visa for you, which could be an H-1B visa or an L-1 visa. Only if you have a visa, you can take up an assignment in USA. Can you take up an assignment for a US company sitting in India? That for that there are no restrictions. If any company is willing to hire you, since you have the rich experience, I'm sure they will be more than interested. You will have to reach out. But if you want to work in the USA, then visa would be the only constraint.
We have many more questions that lined up. So, is there any deliberation you want to do and then take up the question, or else you'll take up the questions as such? Sir? How was it, sir?
Maybe if there are questions, I would say let us go ahead and take it. As I have mentioned earlier, I need to drop off in another 15 minutes. So maybe we will try to cover the questions unless Vivek
Okay.
has it.
So we have, this is from here on. Is it visible, sir? This one.
Yeah, it is visible. So the question is, again, for the benefit of others, I'll read the question and then I'll try to answer it. I'm working in an MNC and aspire to work in USA. How can I benefit from my company to work in the US? This kind of goes very closely with the response I gave to the earlier question, right? In order for someone to work in the US, you will need a work visa, work authorization, and that can be provided only by an employer, a US company that has a subsidiary or a sister concern in India. So if you are currently working with an MNC, I would say maybe that's the best way for you to move to the US. If your employer becomes ready to process a work visa for you, if you have been working here, you may be eligible for an L1 visa. L1 visa is an intercompany transfer visa, and if your employer is willing and processes your L1 visa, then you can certainly move through that company to the US and work for them in the US. Next question, for taking up employments in any corporate or big fours, are you not expected to have a work visa as per the US regulations? If your question is to take up work in USA, the answer is yes. You cannot take up employment in any corporate or Big Four or anyone, because even Big Fours are a corporation, right? So one cannot take up employment in USA unless there is a work visa. As I said earlier, work visa is of two types: H-1B visa, which is a direct immigrant visa, or an L-1 visa, which is an intercompany transfer visa. Again, I don't want to make this an immigration webinar, but yeah, that is what is required to take up job in USA. Vivek, you want to go for the next one?
Okay, so yeah, so this question is, a really good question. What I have seen, at least in my experience, is some of I have actually seen people, setting up accounts in Upwork and trying to get business, particularly business outside India. Very few of them had the success. It all depends upon how you present yourself, because the person who is actually looking have the person who has actually posted the requirement will have 10 or 15 people responding to them, and even they don't know the capabilities, because everyone will write whatever capabilities they have. But the better way of doing this is if you know some CPA in the US, obviously, who is maybe your friend or someone who is actually a CPA or who is working for a corporate in the US. I have seen people getting business through networking and connections, particularly even LinkedIn may also help, if not Upwork. So what I have seen is people actually get in touch with these people who move on from India, and then they are working in some corporates or maybe even big fours or maybe smaller audit firms, and they actually have their own networking, who can actually who ask them for either two things. They may look for accounting kind of work which they can offshore to India, basically small businesses. Okay, or they may also have some things like a small business wants to set up something in India. They may not be able to go to Big Four because of the kind of fees they charge. So they may be looking at some inbound investment advisory, maybe some small entity to be set up in India and all. Those things are ones you can always get from networking. So I would suggest LinkedIn kind of a platform would be good, where you can actually connect with people who have the relevant network, or you can also tap on to your friends, or the network of your friends. Obviously, definitely you will be able to get, because you said you are a boutique consultancy firm. You, with your credentials, I'm sure you will be able to tap into your network, and you can make it this business. Upwork, I'm not really sure, because I've not seen people make it big on Upwork. You may get one or two assignments, but I have not seen people really make big on Upwork and the financials. Um, so I came to know that team from India. Okay, so I'm not sure about this next question. Online accounting work from India. Yes, I have actually seen people do online accounting. Where actually, for very small businesses particularly, people use these platforms like QuickBooks and Zero. Okay, where actually scanned invoices will be sent over. Very pretty basic work is being done till the preparation of trial balance and financial statement. Basically, these are small companies with maybe businesses with about 200 $300,000 in turnover, or maybe less than that, and it is restricted to accounting services. I have seen that being done for US, UK, and even Australia also. There are people who actually do this accounting work, because now with the cloud kind of software that is being offered by both Zero and QuickBooks, yes, people from India are doing online accounting, and I think the pay it actually varies, but I have seen people get somewhere between $6 to $10 per hour with this kind of skill. Pretty basic accounting skills, the ones we call it bookkeeping, right? Those kind of skills. This one, offshore officers get only big fours get only basic work. While I'm not able to exactly comment on this, I have also heard the same thing. That people in big four offices in India get only the basic work. I would not say it is just the basic. It is some work that they will do where they will get a brief underlying of how the taxation system works, and they also get to read the tax laws. Beyond that, it is always, if you really want to deal in high-end US taxation and all, definitely that is something which will not be done offshore, because see, you cannot give opinions and you cannot do structuring or a high-level interpretation of tax laws sitting at a remote location. Definitely you will always have the local US offices do it, but at least I would say I would not call it a basic work that is done out of US offices or India offices of Big Four. I have heard people actually say that they actually go to the extent of even populating the complete tax returns, and the only review happens in the US and then it gets filed for the client.
I will add a little bit on that question, Vivek. See, there are two ways of looking at this, right? Most Big Four clients are public corporations. Public corporations, by regulation in USA, have to be signed by a US CPA. Someone sitting in India cannot sign their financial statements. Same goes with the tax return as well, because public corporation, then there is lot more scrutiny, lot more visibility. So usually a US partner will be handling their work. What kind of work will they get done from their India offices? It all depends upon the partner's comfort primarily. So it is like a mixed bag. If the partner is very comfortable with their captive in India, then the team will get to do a lot of work, good work, quality work as well. If that partner is too new to getting the auditing work outsourced, then he does not have that confidence and comfort, right? So then the team will get to do very basic work. When I was CFO of a Nasdaq listed company, our auditors for some time were E&Y and KPMG, and the audit partners were of Indian origin. They had great comfort, great confidence in getting the work done from their India offices. So pretty much all of the work used to be done here. The audit manager was also in India. Only the signing used to happen in the US. So it's a mixed bag. You cannot generalize this and say it is basic work or it is complex work. It all depends upon the situation and the comfort of the audit partner who is signing, or rather the tax partner as well. Okay. Next question, how do we get US client base from India as a practicing CA? I think Vivek covered that well in the earlier question, so we will skip that. I'm holding COP in India. I'm shifting to Kuwait. Can I do my own practice there? As far as I know, the answer is no. But maybe unless Vivek, you have any idea.
I think I agree with you, Rama, in this case, because I'm not sure about Kuwait, but in any country, if you want to do practice there, there are certain local regulations and there is a licensing requirement which you will have to satisfy before you can actually do your own practice there. So based on that, it's a generalization that I am looking at. Based on that, I feel, if you are having a COP in India, it is not a straight case of going and practicing in Kuwait. There should be some local licensing requirement. It may not be, cumbersome also. I'm not really sure about Kuwait, but, I believe there will be some licensing requirement locally before you can do your own practice on that.
Sure. is there any possible way to set up a CA practice firm in US? So see, in the US, if you need to sign the financial statements, especially of a public corporation, you need to be a CPA. So if you are not a CPA, then you cannot set up a practice, especially to sign the books of the public corporations. If your target clientele is private corporations in the US, then maybe you can certainly do it. You can set up a CA practice firm. You may not want to call it CA, you have to call it CPA, but again, you should be able to explain to your clients that a CA can do it. So yeah, that will be a long order. If seriously you want to set up a practice firm in US, then maybe you should take up CPA. If you want to do the work from India and reach out to clients who understand this from India, then probably you can continue. But if you're seriously looking at setting up something in the US, then maybe CPA will be more helpful to you.
Okay. So on the next question, I see that you have done your diploma in international taxation from ICAI and 3 years of experience in corporate international taxation on contract basis. So your question is, shall I join in India, US, or UK or Singapore, or am I? So if you really want to actually make a career in international taxation, I think you must have already got your basics through the diploma in international taxation conducted by ICAI. It's a great course. It will provide you with all the fundamentals and the ground to actually build your international taxation upon. But because you have asked for, is there any other course that you want to do? I would suggest, there is a diploma in international taxation provided by the Chartered Institute of Taxation in the UK. I have actually gone through some of these modules just for not that I have subscribed to it, but I just went through for a learning. It's a great course. You may want to actually explore that course. I think it's Advanced Diploma in International Taxation from the Chartered Institute of Taxation in the UK. I think you will be able to, if at all you are wanting to build your career on purely on international taxation, on the tax laws, so treaty interpretation, structuring, and all, to add to your capabilities, I would suggest you can explore doing that particular course. And on your question, should I join India, US, UK, or Singapore? It all depends upon your personal choices. The international tax market is as good in India as it is in US, Singapore, UK, or Singapore, because we have a lot of inbound FDI coming in. ODI is going out. There is a lot of structuring that has happened, particularly earlier we used to have only one single structure come through Mauritius or come through Singapore, but because of the evolving tax laws and the treaties getting plugged, the people are also trying to get into newer areas on how to structure. It's not about inbound investment only. It is about how you take your profits out. There are I've actually seen people do cross-border mergers. Flip your holding structure between India, and most commonly it happens to Singapore. So there are a lot of things. So it is not that India is good or US is good. It's up to your personal choice. But wherever it is, these are all good markets that you have actually talked about. But I would leave it to your choice. Every one of them is really good. Rama, do you have anything, at least as far as this particular thing, MOU? I think the institute may want to answer this, but I have not seen in the news anything which actually suggests that there is a MOU planned. Maybe this is a question for the institute. I am not sure about the MOU planned with the US. I'll be moving to USA. So as far as the other question is concerned, on moving to USA shortly, what would be the opportunities for me there? I'm planning to take an IFRS certification. Would that help? I would suggest yes. So, it is US does not just mean US GAAP, because, taking an IFRS certification will at least, because one thing we will all have to understand is both US GAAP and IFRS are at a framework level, both are aligned to each other. While there are differences, it's not that they are actually word to word the same standards. Definitely they are not. There are certain differences, but by and large, after the recent alignment that the FASB and the IASB have done, particularly on the standards relating to revenues, the financial statements, financial instruments, leases, and all, a lot of these differences have started converging. So maybe even if you were to take an IFRS certification, and even if you go to the US, I would still think that you will not be way off from what a US GAAP suggests. You would still be able to understand, the minor differences or whatever. At least you will be able to appreciate the differences that are there once you start looking at US GAAP financial statements. It is not that you are looking at something very new, but you will be able to understand fairly what a US GAAP financial statements talk about. Rama, do you want to talk about this thing? Anything that you want to add here?
No, Vivek, you covered it well. That's good.
Okay. To file income tax returns, doing enrollment agent is mandatory. How can I think there are courses which you can do from India, where you can actually apply for an enrolling agent. I think you can do that course from India. I think the course the examination also can be taken from India. The EA examination. I think you can. I think it is available on the Google. Maybe you may want to go and search how you want to enroll, and how you want to become an enrolling agent, and how you want to give that. Is there any difference in the accounting method? It's a very, very widely worded question. India, UK versus. So it's not something that we can answer in one line or two lines. Yes, there are differences in the accounting methods. Even from a framework perspective of the standards, there are a lot of differences. So I just can just say that there is difference. If you ask, is there any difference? Yes, there are differences, but this is not, at the time where we can discuss what exactly is the difference between the accounting in these. The scope of forensic audit in the
Vivek,
USA. Okay.
Vivek, one
That's
moment. I have a hard stop at 6, so I have to jump off. Before I
sure.
do that, I would like to thank Mr. Naresh Gilli, Vivek, and the organizers of this webinar. And of course, I'm really happy to have interacted with all of you, the participants here. And I hope I was able to answer some of your questions. This is my first time here with ICAI doing this webinar, and I'm very happy to have done that. Thank you so much for giving me the opportunity, and I look forward to interacting more in the future.
Thank you.
Thank you so much for your time, sir. We look forward to have much more sessions. Thank you.
Thank you. Thanks, everyone. Good night.
Yes, sir. Vivek, sir, how was it, sir? We'll take up the presentation and then we'll go for questions, or how was it, sir?
Yes. So, yeah, how many questions do we have, or do we
We have another 3-4 questions. So from here, we have 4 questions,
Okay,
and we have another. You finish this off, and we'll go for presentations. Sir. Yeah.
we'll finish this out, and then we can go to the presentation. So is there any, okay, we covered the differences. What is the scope of forensic auditing in the US and UK? This is a very, very evolving space. There's a lot that, you can actually do in forensic auditing, because there is earlier, if you see, this was only again a domain where big four firms used to operate. Now, there are a lot of boutique firms that have started. There are a lot of softwares that are being developed to aid in forensic auditing. And at one point in time, if you were to say about some 10 years ago, if you talk about forensic auditing, many people would even not even know, understand what this is about. But right now there is a lot of awareness among people on the forensic auditing and the scope. Yes, if you were to talk about US and UK, there is, I would say, there is a lot of scope and relative to India, there is a lot of scope in these two countries. Particularly, but again, if you were to talk about the target market in these countries, it will again be only listed corporates or even some of the startups where there have been some irregularities. But the market is a lot different from the normal auditing market. How cost management accounting is given importance, and any governance laws, SEC impact on accounting may be private corporation do not have to bother. I did not really understand this question, but if you are looking at a management accountant, like what we call in India cost accountant, right? There is no law in the US that actually requires a cost accounts and the cost audit kind of it. But yes, management accountants have always been in demand because these are the people who actually provide the internal information for decision making. Okay, from a governance laws, from an SEC impact. Yes, I would say there is some role for even the management accountants, because when you actually file your Form 10Qs and Form 10Ks or even 20F, there is a lot of information that is put in the annual reports, which actually is derived from the local management and the internal reports that get presented. Particularly, some of these segments, like your operating segments, they're like completely driven by your management accounts, and at the end of the day they get tallied to your financial statements. So yes, there is a decent importance, not from a statutory perspective that there are any laws which require companies to maintain cost accounts and all, if I understood the question right. But yes, there are really good roles where management accountants can make a difference. I hope I understood the question right and I answered it right.
So can we go
Okay.
to the yes?
So do we move forward? I'll
Yes,
just
sir. I gave
take.
you the presenter, right, sir? You can share your screen with the presentation.
Okay, sure.
Keep your visible, sir. I put it in slideshow.
So am I visible?
Yes, sir. You're visible, and PPT is also visible, sir. You can run through the slides, and after that, we'll take up the questions, sir.
Okay, so okay, we have gone through the background of UK taxation laws and all. So let us actually move forward and see. I have a small presentation. Maybe we'll go through it for about half an hour and all, and then we will come back. Okay, so as an overview, let us take a step back and see what is the UK about. If you see, UK is the fifth largest economy in the world. When you talk about nominal GDP, right? It's about $3.3 trillion. It is as big as Indian economy. Even though it's a little bigger than Indian economy, I would say, when you are talking about the nominal GDP. But the difference is, we will have to even consider the size of UK, which maybe just maybe 1/10 of what the size is of India and the kind of population that is. It's a pretty big economy when you compare that with India. Per capita GDP of approximately $50,000 per annum, really good per capita income when you consider the global average at about $18,000 to $20,000. I think that is what the global average is. These are it's one of the best developed countries that you have, with very high spending power, purchasing power, and the very high standard of living. And again, another economic strength that UK has is the pound sterling, which is the fourth largest reserve currency in the world. When you see when you talk about reserve currencies, we have a couple of them, like US dollar obviously is the reserve currency. Kind of 60% of the global reserves, if you were to talk about it, are held by in US dollars. And then they have the next is euro and the Japanese, and pound sterling comes in fourth. But it is a really strong currency. You'll not see major fluctuations on pound sterling, except for the fact that yes, the last couple of years, because of Brexit and all, there have been significant volatility in GBP, but fairly, it has been a stable currency. The country is also a G7 nation, it's the most developed club in the world if you were to talk about G7 nations, right? The most richest and the developed nations in the world. And then they are a member of OECD grouping, the NATO grouping, and then they are also one of the major shareholders in IMF. I think they control about 4 to 5% of IMF. And then if you see from their financial perspective, it's in London, you can call it as a global financial capital. If you were to really see about, say, the top three financial capitals in the world, you can easily count, London, New York, and Hong Kong. Okay, so this is one of the three major. Tokyo was there earlier, but we don't normally count Tokyo as a financial capital anymore after the Japanese meltdown. So London has always stood its place as a financial capital. The financial institutions, if you see in major banks like HSBC, Barclays, Standard Chartered, you name the bank, it will be there. A lot of large banks are headquartered there. You have insurance companies like the Lloyd's and all, which are based out of London. You have investment banks. A lot of deals are done through London. And to add to that, you also had, I think many of us must have heard, or almost all of us have heard about LIBOR, right? London Interbank Offered Rate. Although it is like getting phased out pretty soon, rather it was phased out, I would say, but it is still continuing for whatever support it has to do for the next 1 to 2 years. But LIBOR at one point in time was the benchmark for global lending in the world. Any lending was actually based only out on LIBOR. LIBOR is your base, and any spread that you had to have, any loan was actually granted with reference to LIBOR. And then if you see London again is the most preferred arbitration center in the world. If you again see there are 3 or 4 global arbitration centers: New York, London, Paris, and Singapore. Okay, so London is, and if you see the most preferred location is London when it comes to arbitration, because one is, the costs are comparatively lower when you look at New York and Paris, and it's a common law country, and you will have good arbitrators in London. So it's almost, if not London, then people look at Singapore as the next center for arbitration. But it's a very, very big arbitration center we are talking about in London. It's a significant destination for both FDI and even real estate. So there are a lot of companies that put in money and start businesses in the US. And real estate, we all know about the real estate prices in London and how the entire money in the world ends up coming into London. And it becomes the most costliest real estate in the world and most appreciated real estate in the world. You can take it as London. London Stock Exchange again is one of the 10 largest exchanges you have in the world. I think the market capitalization is close to about $3 trillion. It's as big as your NSE or BSE. But it's again for the size of UK. I think you should give it a credit of being one of the largest exchanges in the world. Again, from a transport point of view, if you look at the map, you will always find this country in a very strategic location. Looks like at the center of the world. GMT time, every other time zone is plus or minus this particular thing. So, and one last thing, a lot of Indians look at it is because of the diaspora. Close to about a million people of Indian origin living there, and more people are going to the UK. So earlier, people were actually still going to in the US, but UK, Canada, and the other English-speaking world has also become a place where people want to go forward. So that is the overview of UK as as a destination, and for chartered accountants. Who really want to actually go outside India and make it big. The US is obviously the world's largest economy, but out of the remaining economies, particularly English speaking, because we have to see English speaking economies, right? After US, we don't want to actually say we don't want to look at China because we cannot go and do anything there. Okay, and then Japan and all, but when it comes to the largest economies, English speaking economies, after that, then UK comes in next. Then from a chartered accountancy perspective, you actually have two institutes: the ICAI, which is the Institute of Chartered Accountants of England and Wales, and then the ACCA is the other institute. The only difference which you see is mostly the curriculum is the same. People get to study the same subject and all. But no, the ICAEW is members are mostly engaged in practice, and ACCA folks are mostly in the industry, and both can apply to be to practice as auditors. And from an institute perspective, I think we have also seen a question earlier about the US, but from our Indian institute perspective, ICAI, we have an MOU with ICAEW where you actually complete one level and an ethics program, and then you can become a member of ICAEW, and then you get the requisite professional practice for about 2 to 3 years, I believe, and then it actually you get to practice there. So you can actually become a member, and then you can apply for a practice. Now, insight into taxes, the UK has quite a range of taxes. You have income tax, the corporation tax, basically a little different, but what corporates pay. Then again, there is an inheritance tax. Then you have capital gains taxes, VAT, and there are some other non-corporation taxes also. These taxes have been introduced pretty recently in the last 5-6 years. And with the changes in the international taxation regime that we are seeing right now as a part of BEPS 2.0, we feel that some of these taxes which are non-corporate, the last point, right? So those are the ones that get phased out as we speak, maybe in the next 2 to 3 years, but we will have to wait for that. So before we start, are there any questions, or we can move forward? Okay. So so what we see is that the taxes when we come to I am not actually touching personal income tax at this point in time, because it's actually a subject that we may not need to talk right now, because it is a very it actually moves depends upon individual to individual, the sources of income they have and all. So, but whenever we talk about international taxation, we normally focus on corporate taxes on the companies, because that is the big part of it. It's not the personal income tax. So when you come to corporation tax in the UK, it's actually 19% for all the companies. There are some deductions and all, but fairly we see it at 19%. So the one thing is, all companies which are incorporated in UK are automatically resident, similar to your section 6 of India, right? Your income tax act. the moment you are incorporated in India, you are automatically a resident in India. But one thing that UK actually has is where you have the UK has a treaty with another country, and based on your treaty, if the holding and the management control is outside UK, then even though you are actually a UK incorporated company, it is actually deemed to be a non-resident of UK, and the tax laws apply accordingly. Okay, so there is actually a proposal to increase, and actually it will the tax rates will go up from 19% to 25% from the 1st of April 23. Again, the 25% tax rate will be for all the companies with profits in excess of 250K GBP. But again, this is a very low threshold. If you see, 250,000 on tax, almost every company, which is not a small company, will make it. So ideally, for all the large companies, we can actually take it as 25%. They said, below 50,000 pounds, if there are companies making profits, then 19% tax rate is there. And between 50 and 250, they actually have a marginal increase at each level, and they will actually there'll be a staggered increase in the rates. So again, UK law is like how we all have in India, right? It says non-resident companies are taxed only on income through your permanent establishment. So the moment you don't create a permanent establishment in UK, even if you are doing business, you don't have a business connection through the PE, and there is no tax that is imposed on the income that you are sourcing from there. Again, the other three streams that you normally talk about, right? Dividend, interest, and fees for technical royalties and fees for technical services. Those will still be subject to TDS, but beyond that, if you are talking about business profits, particularly the Article 7 related items, those are not actually taxed, without having a permanent establishment. One thing that they actually say is a carve out from that is, if you are having any real estate transactions, irrespective of whether, let's say you are a company based out of India, you have, an asset, a real estate asset. Say you have a commercial building, or you have a residential house in the US, sorry, in the UK, and then that is getting transferred. So though you are a non-resident, because this is a real estate transaction, the income will be taxable. Okay, so those are the ones that we are looking at on the income taxes. So on the capital gains, tax, there is no separate different rate for capital gains, like how we have, long-term capital gains and short-term capital gains. They are subject to your normal corporation tax rates, which is at 19%, right? And then indexation is also given for computation of capital gains. If you are so similar to how we actually have a cost inflation index, and if you buy property at some point in time, or an asset in some point in time, and later on it is actually it is actually disposed of, then you actually get the benefit of indexation. And then non-resident companies, again, if you see, non-resident companies disposing of shares of the UK subsidiary, again, are not liable to tax. This is one interesting provision that you have. Let us say, that is how before the Mauritius Treaty was amended in 2017, almost every company which was coming to India, right, was actually setting up subsidiaries either through Mauritius or Singapore, right? So this kind of thing is not required in UK, because even you are disposing, a non-resident company is disposing of the shares in a UK subsidiary. And note, it's a subsidiary. It's not like 25%, 20% investment. If you are disposing of shares in a subsidiary, it's not subject to capital gains taxes. And indirect disposal of shares, which again, they have actually mentioned that if again your company has the shares in which the company in which you are disposing has real estate property, or let's say it's a real estate company, then again that thing. So anything to do with the real estate, taxation applies for non-residents. Anything which is not related to real estate, then you can fairly be assured that there is no capital gains on disposal. Dividends, okay, dividends is one thing. If you see, there's no withholding tax applicable on dividends that are paid out of UK. So, if you have a subsidiary of your company which is in UK and they want to repatriate the profits, yes, profits after tax can be repatriated to the parent. There is no dividend withholding tax on the dividends paid, unless your local country actually taxes you on the dividend income from the subsidiary. Then for the locals, yes, dividend income is included as income, and there are certain allowances have been given, I think around 14,000 pounds or something. After that, it gets taxed. There is no national insurance. This is an NIC is a component of your taxes like a surcharge, but that is not actually payable on the dividend income that you receive. And dividends received by companies are also exempt. Let's say a local company receives dividend, then that is also exempt, because as long as it is a subsidiary or they are received on equity shares, or even on portfolio exemption, like when you hold less than 10%. So either you hold more than 50% or you hold less than 10%, or you hold any equity shares, that income does not form part of the company which actually receives dividend. Look, any questions we can take before we move on, or can we move on? Hello, am I audible?
You're audible, sir. Tell me, sir.
Sure. Any questions, please, or shall we move on?
We have many questions that came up. Maybe we'll take up the questions after the presentation so that you can take all the questions.
Okay, fine. Sure. Then we will actually move on to the losses. So first thing, if you see in UK is the losses, you actually have a little bit different, it's not radically different from what we see in India, but there are certain differences. If you see, first thing is trading losses, losses that are incurred by the company can be offset against any other income of the company. That is what, we also see in India. There's no difference there. A very unique feature that's there in some of the countries, and most of the countries have actually taken it out, is that losses can be carried back 1 year to offset against the previous year profits. Okay, so this is not the previous year concept in India, but let us say you are in a tax year which actually starts from, let us say, a calendar year 2021. Okay, now let us say in 2021 you had a loss. Okay, let us say $100,000 or 100,000 pounds you had a loss. But in 2020, you had a profit and you paid tax. Okay, so what the UK tax law allows you is to, if you see in India, they actually say, okay, whatever you have paid in the past is done. The tax loss of 2021 you can carry forward into 22 or 23 till the time it is offset. But what UK allows it is, it actually says, okay, fine, because in 2020 you have actually paid tax on the profit, you can go ahead and set it off against the previous year from the year in which the loss is incurred. So 1 year you go back, 2021 loss, you adjust it against a 2020 profit. Okay, and if at all any tax is refundable, that tax gets refunded for you. So that is one thing, one unique thing that you find in some of these countries. US also had it, but after the change in the US tax act in 2018, tax cuts and jobs that actually got removed. But UK still has this carry back of losses with for 1 year. and losses can be set off, can be carried forward to be set off. Let us say you set it, you go to your previous year, 1 year, and you were in loss that year also. So you don't have actually a chance to set off against the previous year. So what you do is you carry forward the losses to the next year. So the losses in the next year can be carried forward, set off against the 50% of the profit. So this year you make something, so you cannot actually set off the entire loss against that profit of the next year. What you can actually do is 50% of the next year's profit you actually set off against your accumulated losses, and you again you pay tax on the remaining 50%. I think this is more to ensure that the country has appropriate taxes, tax income instead of actually so it's like a regular tax, like how we do MAT, right? So something similar to that to ensure that the government gets tax revenues every year, and there is no limit also on the number of years the taxes can be carried forward. You can indefinitely carry forward your losses. So some point of time or the other, you can kind of set off all your accumulated losses. Group relief concept, if you see, this is also something which we in India don't know about it. So if at all you have a group, right, and then the group, there is a parent, there is a subsidiary. Okay, in India, everyone is a different SSC. You cannot actually, unless you merge these companies, the tax, the losses get set off against their profits from next year onwards and all that. Again, subject to a lot of restrictions. But here, what happens is the moment you have a parent and a subsidiary, either the subsidiary has a loss or a parent has a loss, you can actually ensure that when you are dealing at a group level, you can set off the profit of one entity against the other entity. This is one thing that you will even note in Singapore also. For companies which are there in Singapore, you will find that the group relief concept is there. Non-resident subsidiaries. Okay, so what happened is earlier, again, when you call it a group, it's not the 50% subsidiary, it's 75% you need to have in those companies. So more or less, complete the subsidiaries, either 100% or anything above 75% you need to have in those companies, where you can actually opt for a group relief concept. Again, if you see, 75% is the same thing that Singapore also uses when you talk about a group relief concept. Non-resident subsidiaries, earlier this was actually there, even extended to EU subsidiaries, but after the Brexit has happened from 2021 onwards, this relief is no longer available. So only UK companies you can actually set off from a group perspective. Capital losses as per the revised rules can be set off against. Okay, so earlier capital losses or loss on your capital assets were able to be set off against your other income, but now they put a cap of about 50%. Again, the one other thing they said is that the local UK law has is, when you are actually transferring your capital assets from one entity to another entity, let's say you say sell land and building from one entity to another entity within the same group, they don't have a capital gain concept within the group. What they do is they actually take the other they actually don't whatever is the purchase consideration paid, that is taken as the cost of acquisition of the previous company. Okay, no time limit for carried forward of absorbed losses. That is what we have seen. And again, similar to India, if you see Section 79 also talks about this thing. When there is a change in ownership and there are certain conditions prescribed, you cannot carry forward your unabsorbed losses because your ownership has changed. In India, we have that 51%, right? So if UK also has similar rules, it's not just India. We have that Section 17. UK has it, even US has it. So it is that similar rules they have, where you actually change the ownership and your unabsorbed losses expire. On the transfer pricing, you can actually see a lot of rules are similar to what we do in India. The TP rules are based on OECD model because UK, obviously being an OECD country, they follow this particular model, Article 9. And then, they are mostly principle based and they don't have any formulary or bright line tests. Okay, so when a TP is calculated, they actually don't have anything saying that at least this percentage you need to have and all. So as long as in principle the thing is the price is aligned to the arm's length price. Okay, the TP rules actually accept that. Only again, see again, we also have this rule in India, right? Only upward adjustments are permitted on the TP when your transfer pricing or the ALP is lesser than what you have charged to your related parties. That is not something which can reduce your ALP or the transaction price. Now obviously, the TP regulations say companies will have to conform to the arm's length price. Maintenance records have been specified. You don't need to file those records with HMRC, but you actually have to indeed maintain those records, and whenever some request comes up, you will have to show the basis of your ALP calculation. There are obviously penalties for non-compliances, from 30% to 100% of the tax amount. 30% being the least is where they call it a careless error. So it is like there is some overlook, oversight, or something that which was not deliberate. You have this 30% penalty of the tax amount being levied, and it ranges from 30 to 70, 70 to 100. 100 is where there is an deliberate attempt to actually defraud the tax authorities, and it also gets concealed in such a way that tax authorities should not find out. So that is where your 100% of the tax amount is levied as a penalty. And if you see the TP methods, it is completely similar to what we do in India: the cup method, the resale price, cost plus profit split, TNMM, everything. What we actually follow in India, those the concept is the same. They're all accepted as long as they fit the FAR profile of the company. Again, FAR profile, if you see, is more or less how you interpret FAR is theoretically the same whether you are in India or any other country. Again, if you see, there are no safe harbor rules published like how we have from the CBDT, right? Say you may need to have at least 20%, 25% markup and all. So UK being a country where they don't want to actually tell people what to do, they actually said, we'll not publish any safe harbors as long as you feel that, as long as rather we feel it is an arm's length price, we are fine with it. There is nothing prescribed as such. Okay, and also on the transfer pricing, as per after the OECD PEPs action plans that were submitted in 2015, right? UK also introduced rules around the filing of master file and country by country reporting. And these have to be filed with HMRC, which will later share with the other countries. And there are filing penalties there. And the other things like the APA regime exists in the UK. They normally prefer multilateral APAs because unilateral APA hardly makes any sense, right? So they actually look for HMRC looks for multilateral APAs, and when they feel that your APA is something which is not fairly complex enough, they may actually even say that we will not take up this APA. So that is what the transfer pricing is about. On the international tax aspects, if you see interest restrictions, yes, there are related party interest payments that can be questioned. Obviously, again, this is again principle based. So as long as these are reasonable, you don't get questioned. But if you have very heavy related party interest payments. Obviously, HMRC will question you. They also introduced the rule which actually says interest payments related parties should not be exceed 30% of your EBITDA. If you see, this is exactly the same percentage that you have in India under Section 94B. Okay, this was actually, so why is it so similar? Is because it comes from the same source of OECD action plan, which actually talks about restricting interest deductions. So because it's the same 30%, everyone is more or less using the same percentage. Excess interest will be disallowed for computation. UK also has certain thin capitalization rules. Where they actually said, anything beyond a reasonable level of debt will be disallowed. So, like other countries, they did not publish whether it is 1:1, whether it is 3:1, whether it is 5:1. But again, it is up to the discretion of the HMRC to actually see and say what is the appropriate level of debt. It could be, different for different companies, industries, the age of the company, everything. But so they never published anything saying that as long as you're within this, you're fine. So there are no safe harbors as such. But it should not be excess and the thin capitalization. So though thin capitalization rules are there, they exist mostly on a principal basis, and you can never be sure whether you are within the threshold or outside, unless because they are heavily fact dependent. You see, yes, US or the UK also has the controlled foreign companies rules, where if a UK company is holding more than 25% of share capital of another company outside the UK, so it's not ideally a subsidiary, right? At least it can be an affiliate company or associate. So the moment you have a 25% holding in this company, there are some exceptions that you can apply on the profit margins. But they actually, there are certain incomes that are prescribed, which will be considered as a CFC incomes and would be taxed in the hands of the UK company. The only thing that the one thing that they have prescribed is, the CFC rules don't apply if the tax rate of the subsidiary's jurisdiction, or the jurisdiction where the holding, the at least the 25% holding is there, is more than 75% of the UK tax rate. So let us say UK tax rate is 19%, for the sake of comfort, let's say 20%. So the moment you have any country which has a tax rate of above 15%, 20 into 0.75, right? So there, these CFC rules don't apply for incomes in those countries, because they are fairly closer to the tax rate, and the authorities feel that there is no major plan to actually shift profits to this particular location. The moment it is actually lesser than that, maybe 10%, 5%, or even 0%, then you actually have a problem. You can come into the ambit of controlled foreign company rules, and the rules are also being modified in accordance with the BEPS Action Plan 4. Okay, now coming to the tax treaties, UK has the highest number of tax treaties, that any country in the world has. 130 tax treaties. Okay, with almost every country, they have their tax treaties. Almost all treaties are based on the OECD model, being an OECD country. And some changes have been necessitated because of the Brexit, particularly with the as late as I think January last year, they renegotiated their treaty with the US, and then with a lot of EU countries, the treaties had to be renegotiated. UK is also a signatory to the BEPS action plan on AP15, which is basically the multilateral instrument, where wherever you wanted to change your tax treaties in accordance with the BEPS action plans, you actually, this is like one single repository where you can actually call out a country, and the moment the country accepts to at a very high level, the moment the other country accepts to change your tax treaty with you, you can actually go ahead, include those clauses which you want to change, and at one single shot you can amend your treaties. Otherwise, it is to go to each and every country and renegotiate the treaty and redo the treaty. It actually takes time. If you see, because to give you a background, some of these treaties may even take as much as 10 years, 20 years. India-US treaty, if you were to have a background, it took close, I think, 30 years to come to its final form. So some of these, BEPS because UK is a signatory to the BEPS multilateral instrument, so it also, wants, it's also into, changing the treaties based on the best action points that have been agreed. We'll just take a quick look on VAT. The standard VAT rate at 20%. Very few items are there at 5%, but overwhelmingly it's a 20% VAT rate. And then the registration threshold is kept in at 85,000 pounds. The return filing can be both quarterly or monthly, depending upon how the company wishes, because the moment you want to get the credits early, you can actually choose a monthly return instead of a quarterly return. Again, similar to India, VAT liability is on accrual basis. RCM, reverse charge method, is applicable on certain imports. This was mostly on imports from the EU nations, but again, after Brexit, a lot of that has changed. And you need to maintain 6 years timeline for the accounting records to be maintained, at least for the VAT purposes. Okay, coming to what kind of services that I think there was one more slide we missed. I think there was one more slide I actually missed. But anyway, we'll just carry on. I'm not sure why it is not appearing. Yeah, so what are the things that CAs can do in the UK? First thing is, accounting. Most of the companies in the UK follow IFRS, and even the local GAAP. IFRS is very much aligned to IFRS. So if you can take it that if you actually have a good command on Indies, probably 95% of what IFRS says and what the local GAAP says, you will be aligned to it. So that is one advantage that we have after getting into the Indies regime. And we actually keep changing our standards in accordance with what IASB specifies, right? So that is one very good thing that now Indian CA students or Indian CAs are on par with. Even if you study some accounting course in the UK, or whether you study it in India, or whether you study it in Canada, more or less we are all studying the same things, and we are all equipped to deal as much as anyone else has. So there's no geographical disadvantage that we have to learn something to go to that country. No, you just have your base on Indies and you go to any of these countries. Hardly about very very minor differences that you would have, and we are there. The second one is, yeah, it's a common law country. Even if you see India, most of the laws that we have in India are based on English law, because we have the colonial past from where the British left us. So a lot of laws, and even right now when we actually have the court rulings and all, if at all we don't have a precedent, normally you will always see some of these cases where they refer to some English case laws when to find a precedent on how a particular clause has to be interpreted. So when it comes to interpretation of laws, when it comes to precedents, when it comes to the structure of law, how the law and how the acts are structured, you will find it that the laws in these two countries are pretty similar. Tax system, yes, your UK is based on OECD tax principles and BEPS action points. If you also see, India has been very closely following BEPS as a part of the OECD G20 program, right? So we have actually implemented a lot of changes that have been proposed by BEPS, right from your action plan 1 to where it actually talks about the digital economy, introduction of equalization levy. In fact, I believe India was the first country to introduce equalization levy way back in 2016 when we started at 6% on advertisement services. Okay, and then the other countries actually followed. Right now, I believe we have anywhere between 10 to 15 countries which have gone ahead with unilateral levies. Okay, then you have action plan 4, action plan 3 rather, where you actually have this 94B of interest limitation. Then action plan 6, where you actually introduced the principal purposes test in the treaties, to ensure, and treaties have also been modified with some of the countries like Cyprus, Mauritius, Singapore, and all. So we also introduced the country by country reporting and master file, the forms 3C, and all. We actually started doing that. India is a signatory to the multilateral instruments, and certain transfer pricing changes. Also, we have got to be in line with the OECD principles. Some of our TP related things we actually rely on what. So though OECD is not a guiding factor for us, but yeah, it is something that you can actually take cues from. So I think going forward, or most of India's international tax principles would be aligned to what OECD does, and that is also an advantage because you are now moving into a common tax framework. Huge market for Indian IT services. So even if there are chartered accountants who want to pursue their careers in ERP, or they want to design accounting systems, internal controls, whom you have, but there's a wide market there. Again, coming to the next point, internal audit, UK is currently working on a SOX type of framework. If you see, India has this ICOFR, and the US has SOX. Some other countries like Japan have all their own JSOX, but UK is also working on an internal control framework. Not that they don't have one, but they want to make it a more formalized framework. Inbound, outbound advisory pertaining to India, which is a huge business which CA services, CAs can actually do either in India or the UK, so they can actually advise the clients on the business environment in India, about the tax laws in India. Particularly, big fours do this, but it's not just that only a big four can do it. While they always have the market advantage, but there are niche firms that actually work on the inbound outbound advisory pertaining to India when it comes to UK, or even for that matter US. On the financial services side, there a lot of M&A activity actually takes place in London, because again we have discussed that this is the global financial capital, right? So you have due diligence being done out of UK for any M&A deals, advisory on how to structure things, how to structure your holdings, what are the best jurisdictions that you will have to set up your subsidiaries, how to set up, what kind of framework governance you should have. Loan syndication, yes, when we are actually talking about the loan syndication, basically when LIBOR was in existence, LIBOR was actually taken as the rate to go with for the loan syndication in the UK, because all major banks, if you see, every single major bank has their either global headquarters or regional headquarters in London. And then if you really want to take big ticket loans in the tune of maybe even $1 billion, $10 billion, and all, you can actually syndicate these loans in London. Insurance, reinsurance, and all it's a major global market for your insurance and reinsurance. I know about certain chartered accountants who are working in insurance space, the Lloyd's Group, and the reinsurance companies, which actually require a lot of CA skills. we have discussed about arbitration. London is the seat of, you can call it the headquarters for world arbitration. Again, being a common law country is also an advantage. It is known for its arbitration capabilities. And also the cost is not very high. So the CAs can also enter into the arbitration space, because if one thing in UK, if you see, there is exactly no specific qualification, saying that you need to qualify so and so exam to become an arbitrator, you need to get a license. No. Okay, so as long as you have the requisite subject matter knowledge, where you are actually deemed to be a person who can arbitrate a dispute, and you are independent of the case, you can actually do arbitration in London. Again, on the insolvency bankruptcy laws, the bankruptcy code in the UK is fairly similar to what we have in IBC, except that the IP is appointed there by the bankruptcy court, or what, there is some regulatory authority. I'm not able to remember its name. Instead of the committee of creditors, this authority of appoints the IP, and then the IP reports to the bankruptcy authority and not to the COC. Finally, again, the audit services, we have seen that the ICAW and ICAI have a memorandum of understanding, and which enables CA members to actually become members of ICAW. And while they may not be able to practice immediately, but with the 3 years of experience criteria being satisfied, yes, people can apply for practicing in the UK. There are a couple of Indian chartered accountant firms that I have actually worked with in the UK. They are actually practicing chartered accountants who have completed their CA in India, and went on to get additional qualifications to practice in the UK. The last thing, as we speak right now, there is a free trade agreement that is being worked upon between India and the US. The UK Prime Minister, as we speak, is in New Delhi today. And the free trade agreement may come into force by the end of the year, if everything goes right. And there, you will have a huge access to, on both sides. You will have UK legal and accounting firms providing services to Indian clients, Indian firms, with the requisite experience and the qualifications, being able to provide legal and accounting services to the UK. But I feel, it may mostly be the other way around, that the advantage is with India, at least on this part of it, on the accounting services side, if not on the legal services. But I feel that this FTA, which may come in, if it comes in its current form, and if it comes by the end of the year, then it will be a major boost for Indian chartered accountants to explore advisory and accounting services in the UK. That brings me to the end of my presentation, and then
So, sir,
we can take.
I will share my screen, sir, for questions. So is my screen visible, sir?
Let me. Uh, yes.
From here, sir.
Okay, so should I surrender my COP if I am abroad? I don't think you need to surrender your COP if you are abroad, but as long as you are not engaged in any employment, I don't see a reason why you should surrender your certificate of practice just because you are outside India. Um, Is there a training institute in India which provides basic exposure and guidance on starting practice? Okay, so there is no training institute as far as I am aware of, but we can actually get to know about. If you actually go to LinkedIn, you will have a lot of Indian origin chartered accountants who are in UK, and then you will be able to network with them and they can guide you, because this is not something where you actually go and get a training. You can actually, once you have the requisite skills, right, it's only about knowing the market and how to approach the clients and their business practices, which should be fairly simple once you actually get the right person who can advise you. Can I hold a COP for CA and CPA at the same time? And being a CPA, can I sign the financial statements of US company from India itself? Okay, the first question I am not sure. Maybe it is for the institute to answer. I am not really sure about whether you can hold two certificates of practice. But yes, the second one, I can tell you that yes, you can sign the financials of in the US companies from India, but there are certain restrictions that you need to actually attain certain levels of credits every year, and you also have to, I think, register yourself with the Public Companies Accounting Oversight Board (PCAOB). So I know about the chartered accountants who sign your financials of US companies from India, but it is not that every person being a CPA and with the COP can sign it from India. That exactly is not the same. It can, but there are certain conditions to be met before you can actually sign from India. What are the current US government, as per the current US governments, are they welcoming foreign talent? See, this is a very generic question. Are they welcoming foreign talent? If you ask US, they will always say, we always welcome foreign talent, and US is a country which is built on migrants and all. But it all depends upon case-to-case basis when you apply for your, particularly your H1, if you don't have a sponsoring employer, right? When you apply for your H1 and all, chances are you may get it, you may not get it. It has nothing to do with your talent, because there are so many people applying and only limited set of visas, right? So you may or may not get it. So you cannot blame the government. You can not blame yourself for not getting a visa. It is basically the system that has limited the number of visas available. But yeah, if you are actually joining any company where you actually, your employer can actually sponsor you an L1 visa or an intercompany transfer between India and the US, or L1A if you are in a senior position. Yes, there is these visas L1. You will pretty soon get it. If you, the moment you apply, maybe I would suggest maybe another in 3 months you would get these visas from, because these are employer specific visas, and you cannot go to US and then change your employer, because the moment you cannot change an employer when you go on an L1 visa. And I've seen people who went on L1A, pretty senior people who actually went on L1A from India to the US, and they had dreams of actually settling down in the US. And the moment, because L1A is a very senior or very management level visa, right? Within 5 to 6 months of their landing in the US on L1A visa, they even got their permanent residence green cards also. You would not believe. So L1A visa normally is something, is a route to fast track permanent residency if you are someone who is a senior. As per current US government, are they welcoming? This is, I think, something which we have. I have my MS program in the US, MS in Business Analytics, MS in Accounting versus MBA Finance, which I am not exactly sure on this, but if you are looking at an MBA finance from a very prestigious institute, normally, there is a lot of scope for actually landing up in really good companies in the US. It all depends upon the area of finance, the area of MBA that you take up, the university or the college in which you have completed your MBA. So it's a good thing. So MBA as such is a very valued qualification when it comes to the US. It all depends upon which college you have did it. The next question, if you want to move to UK, do you need ACCO course? I would not say you would need, while it's good to have a local qualification which is locally recognized, but it is nowhere, there's nothing cast in stone that, you need an ACCA qualification. You can be an Indian chartered accountant, go and actually do your, finance job in the US, in the UK, as long as, I would, more than an ACCA course, I would suggest, knowledge of UK taxation and IFRS being the key ingredients. I would not again call them compulsory because, but they are, very, very much recommended if you want to land up in a very good job in the UK, if you want to move there. Which is a better place for work and life, England or Ireland? When it comes to Indians, normally people prefer England, uh, and not even the other parts of UK like Wales or Scotland, but people prefer England because there's a large diaspora there, and England's economy is close to, I believe, 60-70% of the entire economy of the UK. So people actually prefer, and a lot of job opportunities in England when compared to Ireland. So when it comes to a better place from a professional growth perspective, I would suggest England over Ireland. I have article. Can I get a chance to work in Big Four GDS units? I believe yes, right? If you are actually having a TP skill, and you want to work in the Big Four GDS units, yes, you may actually get a chance because some of the work may be towards the local taxation, but on the transfer pricing also, I believe the GDS units do a fair bit of transfer pricing things. The next question, investment bank in UK, what should I do? It's a bit tough question. So you want to work in an investment bank. First thing is, when you want to work in an investment bank, your skill set should be a little bit different from the traditional accounting, taxation, and all. You need to be more oriented towards the financial services space, or the capital market space, or on how, or particular on the valuation side, due diligence side, okay, on the international finance side, on what are the things that actually drive mergers and acquisitions, or what are where do people get synergies, and what are the things that actually drive mergers. Okay, so there's not one such thing. I would maybe a good, very good MBA in a good college will actually give you that oversight, and also you may, if you are working in India, and if you have exposure in Big Four, a lot of Big Fours have their own M&A cells. Okay, so if you are working in one of them, yes, definitely, landing up in an investment bank in England should not be a challenge. No outcome heard that they're not considering candidates. Okay, from an international tax, what do you say? They are considering candidates from outside. I did not understand the question, which says there is no outcome, although you heard they are considering candidates from outside. Mhm. I don't understand what the question is. I have not seen anything which actually said that no, outsiders are not considered for UK jobs, but as usual, preference is always given to the locals, because obviously there are a lot of local people applying for jobs. And then it all depends upon the profile we present. Unless you know that the position is there and you are pinpointing a particular position and you are applying, chances are a little bit difficult for people who apply from outside to get a job, because it all depends upon because they will have to. The first thing, if you see in any countries, why locals are preferred, one is that the governments mandate local hiring, and second one is they don't want to actually sponsor or take that additional burden of getting a person from outside the country and sponsoring their visa, ensuring that they actually align with the local practices and all. So obviously, the locals will have an advantage, not just in UK, in any other country. Yeah, but no, it's not that it's something which is impossible. You will always get through. So I think that is what I can say. The other question, if you say I'm from an international tax profile, excluding transfer pricing, okay, when applying jobs, so obviously yes. So we see, I have actually seen a lot of big four, no, not the other ones. If you are a big four and if you currently own your practice, you have a very good chance of actually projecting your international tax profile and actually having a UK based company consider your profile. Your chances would be very good. I would suggest you continue, and you will definitely get that particular profile you are looking for, because again, international taxation is a niche area. Not everyone is there in that particular area. It requires a lot of exposure. So I say that you have a very good chance. I have done MBA from UK on a full-time basis. Their advantage as far as job application is concerned. In addition to my CA degree, see, it all depends upon the job that you are applying for, right? So if you are looking at a traditional accounting, financial reporting job, or a financial controller kind of a job, yes, your CA itself is enough for you. Your MBA may not add much value there. But if you are actually looking at, as we have discussed earlier, like an investment banking or financial services, insurance banking, or capital markets, there, yes, your MBA will always add and your CA will be a plus there. Okay, so it depends upon where your MBA degree can add value for you and where it may not add so much value for you. It all depends upon the kind of jobs that you are applying.
Those were the questions, sir. I'm over to
Okay,
you.
sure.
Thank you so much.
Thank you.
Ma'am. You're not audible.
Ma'am, hear you.
Unmute now. No. Can you change the microphone? Let's check whether it's connected. No. Can you unplug it? Yeah, now we are audible.
Am I audible, sir, now?
Now you're audible.
Yes.
Now you're audible.
Yeah, thank you so much, sir. So, firstly, on behalf of SIRC, myself, CA Rekha Umarship, Regional Council Member, SIRC, I would like to express my gratitude for facilitating this session. So, before I could tell about this session, firstly, let me thank Vivek, Raju sir, as well as Ramakrishna Karanam sir, for giving us this very enlightening and wonderful session. So I think the number of attendees who are there in this session itself speaks for itself. There was a consistent viewership throughout. So I think this is one area where most of us get so many doubts, especially ICAI giving campus recruitment, especially overseas opportunities. Many of us are quite apprehensive of which country is best suited for us, because normally there is a widespread thought that only UAE or Asian countries are more suited for CAs. So now I think once this session, after the session, members will get an idea like whether do I really need to do a CPA to get employed in US, and especially with regard to the taxation part. You beautifully explained about the taxation of dividends, transfer pricing, and even the losses about the tax treaty. So I think it was a very comprehensive as well as a very enlightening session. Most of us, I think many of the members have made full use of that. Thank you so much, sir, for this session. We expect you to come for a physical session also at SIRC once if possible. Thank you so much.